Guys, for you guys who don't know, Dan Russo, excellent technician. I've been a big fan of his and his work for a long time. And, I think you guys are going to love what he has to say. So, Dan, hit it, man.
All right, JC, thank you. And, thanks for putting this on for everybody, taking time out on a Saturday. And thanks to everybody for listening. Again, I'm Dan Russo. I'm a chartered market technician. I work for an investment bank called Needham & Company. I sit on their sales desk. And as I said earlier, I cover predominantly fundamental investors, mutual funds, hedge funds, and pension funds, analysts and portfolio managers at those institutions, mainly in New York and in Connecticut and in Cleveland, but really all over the country. And I am what's known as a generalist salesperson, which is kind of, as it sounds, generic. So I needed a way to differentiate myself, and that's where we went with the CMT. There aren't a ton of people in my seat who have that designation, so it's kind of what makes me different and kind of gives me an edge when talking to my clients. So I'll kind of take you through how I incorporate technical analysis when dealing with fundamental institutional investors, kind of the best way to do it. So we can get started. Just some background on my company, Needham. It's been around for over 30 years, founded as an investment bank to cater to small growth companies, predominantly in technology, but now branching out into healthcare and consumer. So, I urge you to check out our website. Firm's been around for a long time. We've got a lot of good analysts and deal with a lot of good companies. And importantly, because technically I am not part of a research group, and we do have fundamental research analysts, I would advise you to visit our disclosure section on our website just to get all of the relevant disclosures from a research standpoint on some of the names that I'm going to discuss here today. So here we are. Who am I and what do I do? So I'm a chartered market technician. I sit on an institutional equity sales desk. So as I said, my clients are fundamental analysts, portfolio managers, analysts at hedge funds, mutual funds, pension funds located all over the country. Right, so right away you kind of say to yourself, well, what is he talking about? This is Chart Summit. He's talking about fundamentals, and that's fair. But listen, that's the environment where I work. So, and as I said, technicals are what differentiate me. So my job is to work with our fundamental analysts to add value to our clients' research and investment process, and that's what I do. I try to provide a technical overlay to fundamental analysis. And additionally, you're going to hear from Tyler Wood later. I am also one of the co-chairs of the New York chapter of the CMT Association. So if you're in New York or ever in New York and you want to come down and to one of the monthly presentations, you can reach out to me. You can reach out to Tyler, who will speak later on. All right, so just kind of looking at what I have at my disposal. We have 20 highly experienced analysts focusing on more than 350 companies in TMT, healthcare, and consumer. And Merrill Lynch has done some great work on this. These three sectors, going back to 1929, are traditionally the three sectors that have provided the most alpha in the market at any given time. So these are the sectors that we focus on because these are the sectors, quite honestly, where our clients spend the most time because that's where the most kind of risk-adjusted outperformance can be found. So with that in mind, we just kind of look for ideas. But at the end of the day, again, my process is I'm a trend follower. The trend is your friend. And at the heart of it, that's what I try to do. Identify emerging trends as early as possible and then take the appropriate position. I utilize price, obviously, moving average, momentum, relative performance, and volume as my main tools. And kind of like all of you who are probably listening here, I believe that price is the most important data point. However, my clients come first, and I have many different clients with many different investment strategies. Some of them are growth and momentum guys. Those are the easy ones to kind of talk to technical analysis about. But, some are value investors. Some are event-driven. Those are obviously a little bit harder. And some are, GARP guys, growth at a reasonable price. But as I said, they are all fundamental investors, right? So I cannot shove my process on them. I have to utilize the technical analysis tools that I have to help them make money within the context of their process. And, I didn't say this in the beginning. If anybody has any questions while I'm going, like Todd, I prefer to be interrupted and kind of take the conversation wherever it needs to go. So kind of how do I help my clients make money? 3 key points. First off, no jargon. All right, these are fundamental investors. As I said, I do not get caught up in the terms that we all know and love. Head and shoulders, wedge, flag, pennant, you name it. I keep my comments jargon free because as soon as I start talking in that language, legitimately the phone line goes dead. Clients hang up. I'll never hear from them again. I'll never win them over to why I can add value. Second, these guys are bottoms-up stock pickers, as I said. They're trying to beat the market on a risk-adjusted basis. A lot of them don't care which way the S&P is going. They don't care which way the Russell is going, at least from a stock picking perspective. At the end of the day, everybody cares which way the market's going, and I'll kind of get to that later in my presentation. And the secret and why I think I can help is that even the most fundamental of investors looks at charts. You know, I've been in the institutional sales seat for 10 years. I've spent a lot of time with institutional investors. You know, I sit in their office and you know, I'm there either with an analyst or by myself, and we're talking stocks and talking markets. And, you know, while these guys are fundamental investors and, you know, they care about balance sheets and income statements and cash flow statements, when you bring up a ticker symbol, invariably, every time, 100% of the time, the first thing they do is they look at a chart. So deep down, everybody's a technician on some level, even the most adamant of fundamental analysts. So what am I trying to do? I try to speak their language, right? I don't try to push these guys to understand what I'm talking about. As I said, nothing will lose their attention sooner than that. So, you know, recently I had a client come in and ask me for some vulnerable names that, you know, maybe they feel like, you know, they need some shorts in the book. The market's been ripping. Their long exposure might be getting too big. They need some names that are vulnerable and, you know, could be short candidates. So I put a list together and I kind of sent them something. I said, here, you know, Bell looks like it's rolling over. It's trading into resistance at the 200-day moving average. The RSI, which is my main momentum indicator, became deeply oversold recently and could not manage a move over 65 on a rally attempt. So, and again, as I said, I look at relative trends. On a relative basis, Bell has broken support. So here's the chart that I sent at the time. This was a request. I think it was in the week between Christmas and New Year. You know, it would very easy to kind of get caught up in the jargon, right? Potential double top here, maybe a rounding top, whatever you want to call it. I start talking like that, I'm going to lose my audience, right? Here's what we have. We have support around the $12 level that looks like it's at risk. We are below the moving averages. Everybody understands this stuff. From a momentum standpoint, here's what we're talking about. We became deeply oversold on this leg down, and then on a subsequent rally attempt, we did not get above 65. So here's here's the relative breakdown that I was talking about. You know, I look at relative because a lot of my clients are long onlys. They're benchmarked to an index, so we care what stocks are doing relative to a broader market. So this was the analysis that I put together on this particular stock for this client. What's kind of interesting here, we can hop over. We can see the setup is kind of still in play, right? We can draw our lines, and we can see that, you know, the breakdown potential is still there. We've kind of rallied a bit with the market. We are back above the 200-day moving average. I still think that this is a good setup on the short side. And I think it's one where you can maybe put a small short out, and then if you press your bets on a break of the $12 level, you'll probably get paid there. So that's, you know, that's a kind of a bespoke request from a client that I put together. But as I said earlier in my presentation, I have 20 analysts at my disposal, and I use them, and I kind of take their language, figure out how to present it to my clients, and provide the technical overlay. So we can go through a few examples of how I do that. And as again, the key theme is I have to speak their language, not shove our language down their throat. So we have a really good analyst who covers the healthcare services space, right? And within that space, one of the names he covers, we all know it, you've all been inside one probably, is CVS. And this is a note from back in November where he upgraded CVS, right? So right away, we're speaking their language. Clients love upgrades, downgrades, ratings changes. You know, it gives them a reason to talk to us and a reason to, you know, maybe start doing work on a stock. So here we have kind of from the fundamental side that even in the face of impending competitive entry in pharmacy by Amazon, we find the risk reward on the stock favorable. especially if they're able to kind of consummate their deal with Aetna, right? A lot of fundamental work being done here. As I said, my analyst is impressive. You take a look at the CVS chart at the time, what I saw was a mean reversion trade. And I wrote this up and sent it to my clients and spoke to a lot of clients about it. Basically, I was of the view at the time that the move to the downside has become extended, and pressing the short was no longer the best risk reward. We were about 15% below the 200-day moving average. And based on the RSI, the stock was massively oversold. However, the recent leg down actually created a positive divergence between price and momentum. So here's the chart of CVS at the time. We can see massively extended from the 200-day moving average, broken down from a trading range that it was in for the better part of a year, right? But what else do we see? We see the bullish engulfing pattern here, right? We're not going to say that to a fundamental investor. I'm sure that this is some sort of other candlestick pattern. We're not going to get caught up in it. We're just going to kind of speak their language. We're upgrading the stock for fundamental reasons. The stock is oversold, is extended to the downside. Pressing the short is no longer a good idea. Here's the small kind of positive divergence that we were talking about, right? This low here was not confirmed by a low in the RSI. So to me, this was a great opportunity to highlight a really talented analyst and put a trade idea in front of my clients. So let's take a look at what's kind of happened subsequently. Here's where the trade went out. Here's where the call went out. This was the upgrade. The timing of the upgrade could not have been better. We analyzed it from the technical side, and the stock continues to work. And we can see now that if we want to kind of implement our technical analysis tools, we've taken out the 200-day moving average to the upside. We've broken a downtrend line. So CVS still looks interesting to me on the long side. It's a name that I would continue to put in front of my clients and continue to have them do work, right? So kind of moving on, other ways to catch the attention of fundamental investors. Fundamental investors love channel checks, right? Channel checks could be anything. It could be talking to employees, talking to customers, talking to competitors. Anybody who's ever walked into an Apple store in a mall or a freestanding Apple store and noticed how crowded it is, that's a channel check. If you walk into 9 more and you've walked into 10 Apple stores and noticed that they are all crowded, well, that's a more robust channel check, and maybe based on that, you go out and buy Apple stock, right? I'm being a little facetious. We know Apple is a popular brand, but there are a lot of other ways that analysts can do channel checks, and our clients love to hear about them. So here we have a company, FIVN 59. It's a SaaS software company. Stock was up 55% over the course of 2017, but my analyst still thinks it has upside. He believes that there's significant upside in 2018, as his checks suggest the competitive environment is as favorable as ever, with Amazon and Avaya, which is emerging out of bankruptcy, posing little threats. I think the common theme that we've seen so far is that Amazon is disrupting everybody's business. Why don't we all just log off now, buy Amazon, and call it a day? That might not be a bad idea, but we're here to learn. So we have channel checks. That's a great way for me to get in front of fundamental investors. What I see from the technical side is that 5.9 was oversold in an uptrend, right? Stock was approaching oversold conditions and moving average support. To me, it was a compelling entry point that happened to coincide with bullish fundamental news. Stock remained above its 200-day moving average. The RSI was becoming oversold, and it was at relative support. So here's what it looked like when I wrote that up, and we can see it, right? Steady uptrend over the course of 2017, kind of consolidating, pulling back here to the 200-day moving average, which was rising, while the RSI became oversold. And on a relative basis, we're looking at it relative to the S&P 1500, hitting support levels right in here. So this was a great opportunity. My analyst did channel checks. I could get in front of my clients, talk about the fundamental side, and then highlight the fact that from a technical standpoint, the setup is really compelling to either open a long position or add to an existing position. And take a look at what's gone on since. It's been a good trade so far. The stock here's where we put it out. The stock has subsequently rallied to new highs. We remain above a rising 200-day moving average as we just breaking out of this consolidation. So again, another one that continues to be a really good idea on the long side for both fundamental and technical reasons. Another thing that I cover a lot of hedge funds, right? So hedge funds, have to be long and short. This is an example where I could take an analyst's actions and turn it into a pair trade idea. We have a great analyst who covers the semi-cap equipment space. So basically, the guys who sell the equipment to the people who are making semiconductors, big, complex, cyclical businesses. But, our analyst has been covering the space for a long time. And he basically made 2 ratings changes that set up a pair trade. He upgraded AMAT, Applied Materials, and downgraded KLAC, CLAC, and he named AMAT his top pick for the year. All right, so fundamental clients love this, right? Here's a pair trade idea. Here's an analyst who is, moving his ratings around. And, at the start of the year, everybody's looking for good ideas. Everybody wants to know what are your top picks for the year. So as I said, this was a great opportunity to highlight a pair trade to clients. So what I did was I just took a look at the relative relationship between the 2 names. And we saw that, AMAT had been steadily outperforming KLA since, February of 2016. So going back almost 2 years, a fair amount of data. Had recently pulled back and so far had successfully tested support at a rising 200-day moving average of the relationship. And the momentum of the relationship had recently inflected higher. So kind of here's a look at what I sent out, and you can see just that, right? This is a ratio of AMAT to KLA. And, steady uptrend since the sell-off in 2016. This is a 50-day moving average along with a 200-day moving average. Right, we've pulled back to test the 200-day. Oversold conditions, but holding where we've been over the course of the past, call it year and a quarter, close to year and a half. So to me, this was a great trade idea to be, long AMAT against KLAC. So I have a lot of kind of chart tabs that I like to look at. But here's we'll take a look at how that trade is playing out and whether or not we still think it makes sense. And, it hasn't played out as well as I would like, but it is early. I think that trade is only about 2.5 weeks old. But you can see, right, like the trend is up as far as AMAT relative to KLA. Just kind of using the simple tools, not getting too caught up in, this was a double bottom and then a breakout. Again, I'm talking to fundamental investors. I have to speak their language and kind of add value in a differentiated way. So that's what I'm trying to do here. I still think.
Hey Dan. So the guys are asking about your time horizon, how you distinguish your specific time horizon on a technical call when you take into consideration the time horizon of the fundamental analyst. So maybe a technical call. Would you just adjust to their time frame?
I try to adjust to their time frame, right? Our analysts have ratings and price targets, which unfortunately for compliance reasons, I can't get into here. But if you go to that link that I showed earlier, you can kind of pull up what their ratings and price targets are. I adjust to their time frame. Price targets for most of the sell side tend to be a 12-month basis. Right, but like JC, at the end of the day, that's what's hard, right? I'm a technician, you're a technician. As far as I'm concerned, you let a trade ride as long as it's working, right? Why limit yourself to a one price target or one time frame, right? If the trend is up and the trade is working, you kind of move your stops up and let the trade run its course, right? Let your winners run, cut your losers, right? The holy grail of what we live by.
You're constantly reevaluating as the data comes in, right? Which in our case is price, right? And then, so yes, obviously I agree 100%. But with regards to your charting sort of process, I noticed and with the guys, Jason Baker's asking about whether you're always using RSI. We have some other people asking that you're not using volume. Can you touch on a few of those things?
RSI is the main momentum indicator that I use. I do use volume. Actually, we're going to get to a few examples of that shortly. However, I don't use straight volume. I like to use on balance volume, and I like to kind of use that to either confirm or look for divergences. So that's, yeah, I mean, look, I try to keep the process simple, right? I try to keep the process repeatable. Remember, I am talking to people who are skeptical of what we do, right? So the more consistent and I can be, and the more that I can show them that I use a consistent process over time, the more likely they are to kind of continue to listen to me, continue to read my work, continue to, call me up and pick my brain for ideas. I mean, I've gotten to the point now where I have clients who just send me a list of ticker symbols and say, give me the technical take on these 10 names, right? But that takes a long time to build up, and I think the reason that I've been able to do that is because I stick to a consistent process, right? I try not to cherry pick my indicators to fit a view. And what's interesting for me is I don't have to write, right? Like, I'm not an analyst. I'm not part of so much as I'm not part of a research department, right? I don't have to put out a note every day or every week, right? I can be opportunistic, right? So because of that, I could have the tendency to be like, well, the RSI isn't really saying what I want, so why don't I check what the MACDs are saying? But I'm trying to be intellectually honest, and I'm trying to be process driven. So I stick to one momentum indicator. I do, as I said, I do use volume, and I'll get to a couple examples of that. I hope that answers the question.
Yeah, totally. Go for it.
All right, so jumping to another theme that fundamental investors love to hear is they love to hear when our analyst has recently met with management, right? You've sat down with the CEO, the CFO, or the investor relations from investor relations person from a company and kind of heard the story, right? Our clients love to hear that. So about a week and a half ago, we hosted a big conference in New York City over the course of 2 days. We had close to 400 companies come in and present and sit down and give us their story. One of my analysts, he had the opportunity to sit down with the management of a company he covers. It's a company called Varonis. They're a security software company. And he came away from his meetings and their presentation with increased confidence. These are his words, what he wrote in a note, in the outlook and growth potential for the company, right? Great. I wasn't in the meeting. I can't say what he came away with, but here's an analyst, a smart guy, deep in the weeds on a company and on a sector. He came away bullish. First thing I do is look at the chart and see if the technicals line up. And what I saw was a stock that was on the verge of a breakout after it was consolidating in an uptrend, right? So, and here we're going to get to, as I said, I use on balance volume, but kind of what I saw was I wanted the position for upside. The stock was still above its rising 50-day, its rising 200-day moving average. And again, I thought it was just a consolidation or a pause because volume, based on the on-balance volume indicator, wasn't tipping its hand to a sell-off. It wasn't like the stock was moving sideways, but the on-balance volume indicator was rolling over. And additionally, RSI, my go-to momentum indicator, appeared to be shifting back into bullish ranges, right? So here's what I saw. Here's what I wrote at the time, right? Nice uptrend. We can see it. We're above the moving averages. We get into this kind of consolidation here with our resistance line, tried to push through and did not get there. But here's the on-balance volume indicator that I use, right? And as I said, this indicator is still trending higher with price. So not so much absolute volume, but the trend in volume is confirming what we're seeing in price. And then down here, our RSI, making a series of higher lows. To me, odds are, JC, you've written about this a lot. After a consolidation, the breakout tends to happen in the direction the stock was heading before the consolidation. We were heading up, we consolidate. My indicators point to probability favoring an upside breakout. So that's what I wrote about. I used a solid fundamental call after an analyst had a meeting with management to say, hey, look, from a technical standpoint, this looks good as well. This has to be on your radar screen. If you're long, maybe you want to add. If you're not involved, maybe you want to open a long position. So kind of switching back and just seeing how this is played out. And again, this idea is only about a week and a half old. We're breaking out, right? You can see we're still above the 200-day moving average, and I'm just trying to keep it simple here by just showing price and moving averages. But the stock has moved up and out of the consolidation. Still a good trade. Probably still has legs to run. We still like it on the fundamental side. So this is a great name for my clients to be doing work on. This is a great name for people to be looking at as we move through the first month of the year. And then kind of the other kind of buzzword that fundamental guys like to hear are initiations, right? Analysts, presumably if you're initiating on a stock as a fundamental analyst, you've spent a ton of time doing work on the stock. You probably have the freshest information, the freshest data in terms of your thoughts and ideas, right? So when we initiate coverage on a stock, guys want to talk to our analysts, but for me, that's an opportunity to look at a new name, something that may not have ever been on my radar screen because, we previously weren't covering it. So here's a fundamental analyst, a very, very smart guy who's been covering the biotech space for a long time, initiates coverage on a stock, and he goes through his thesis on why it's a buy. And, they have this CAR-T technology. Gilead recently took out a similar company with similar technology at a $12 billion valuation, right? So that's exciting. Our clients want to hear about that. Me, first thing I do obviously is look at the chart. And what did I see? I saw a pullback in an uptrend, right? The stock had pulled back to support, setting up a compelling entry point on the long side. It was still above its 200-day moving average. Again, here I'm using volume. The on-balance volume indicator was near 3-year highs, and the RSI was coming out of oversold conditions. Here's what it looked like when I wrote it up, right? Kind of maybe trading into resistance, but stock was moving. We pulled back to support. This took out the 50-day, but we're still above the 200-day moving average. And here's that on-balance volume indicator, right? Volume on a cumulative basis is not tipping a breakdown. It's not tipping a break of support. Right? Stock is coming up and out.
How are you? They're asking, how are you using that on-balance volume to identify a divergence?
So the same way I would use RSI or any other momentum indicator, right? Like here, if on-balance volume makes a new low and it confirms price, like it did here, and here, like it turned out to be a false signal, but I wouldn't have been buying this low, right? Because on-balance volume confirmed, momentum kind of confirmed. It did happen to be a low in the stock, but it was some choppy trading. So what we're looking for is confirmation. Here we have the stock making a new high, on-balance volume making a new high, right? So unfortunately, the RSI here didn't confirm. So what we did was we saw it pull back into support. But I look for divergences at extremes. If the stock is making a high, I want RSI to make a high. I want on-balance volume to make a high. Does that make sense?
Yeah, of course, totally.
Perfect. So that's kind of what we saw at the time of this initiation, which I believe was on January 5th. And sometimes you get lucky. Look, we like the setup. I thought it was good for a trade to kind of the 65 level based on the technicals. A week later, it was announced that Juno was being taken out in the mid-80s. Stock is probably going to run sideways here, right below 86 until the deal closes. Obviously, if you put that trade on, you are a very happy person. Obviously, that's getting lucky. We're not, we're technicians. We're not playing. It's hard for us to handicap. It's hard for us to handicap a takeout. But look, it was a compelling setup on a stock. The risk reward looked compelling. The stock was at around $45 at the time. I thought there was probably $20 of upside for maybe $5 of downside. A 4-to-1 payoff. Looking at it from a technical standpoint, stock happened to get taken out. So if you put the trade on, as I said, you're happy. So that's kind of how I go through my process, how I utilize our fundamental analysts for stock picking. And as I said, my clients are stock pickers, but what's funny is everybody still cares about what the market's doing, right? So, obviously I pay attention to it, and people still pick my brain. Hey, what do you think of the market here? What do you think of this? So I obviously keep track of what's going on. You know, just kind of for the record, I am bullish on equities. This is a pretty up-to-date chart. You know, have we gone a little bit parabolic here? Are we extended and overbought? Yeah, but the main trend is up. Here's confirmation, right? Here's the S&P 500 making a new high. Here's momentum confirming, right? Also making new highs. We're above our moving averages. Truthfully, as I said, the only real knock against the index is that it's overbought. And you know, JC, guys that we know and love who write on a weekly basis, they've been highlighting this for a long time, and the theme is why, you know, overbought is not necessarily bad here. And you know, some, you know, guys like Ari Wald and Jonathan Krinsky have done a ton of good work around this. I would implore anybody who's listening now to check out.
Yeah, I agree 100%. You know, people keep, oh, you know, overbought. I've been arguing for I feel like forever. How can an overwhelming amount of buyers possibly be a bad thing, Dan?
Right. No, and I agree with you, and that's 100% right. You know, these guys that we know, you know, like Krinsky and Ari, they've been talking about it, and I think, you know, I didn't want this to get too crowded here, but you know, look at the percentage of names that are above their 50-day moving average within this index. It's like mid-80s. Like the percentage of names within the index that are above their 200-day moving average, it's like 82%. Like momentum is there, breadth is there. Like, yeah, are we extended? Sure. You know, me, I'm a buyer of pullbacks. Like I'm in the bullish camp for the market, but you know, kind of putting the strategy hat on, as I alluded to earlier. You know, and as Todd alluded to in the earlier presentation, you know, you guys were talking about small caps. Look, this is the Russell 2000 relative to the S&P 500. So on an absolute basis, we saw the charts. You know, small caps have been great, but on a relative basis, if you're kind of, you know, allocating assets within the equity market, like to me, you still want to be large cap, and this chart is why. You know, you can see the Russell on a relative basis is in a major downtrend against the S&P 500. We're below the moving averages. The 200-day moving average is declining. Momentum, this is an RSI of this relationship. It's in bearish ranges, right? So for me, when I talk to kind of higher level portfolio managers who are doing less of this, the bottoms up stock ideas, that, you know, they leave that to their analysts, and they're doing more of the, like, how do I position the portfolio from a strategy standpoint? My big theme right now is large over small, right? So, and we can see that in this chart that's kind of playing out. So small caps on an absolute basis, great trade. Small caps on a relative basis, not so much if you're kind of looking at it from an asset allocation standpoint. Credit's a big theme. I think what we've seen, the breakout in the 10-year yield through 2.6% opens the door for a move to 3%. And I think momentum kind of confirms that trend. Look at the RSI. Look at the series of higher lows that we're seeing in the RSI as this indicator kind of shifts to bearish ranges. And, you know, did we achieve the RSI level that we saw here on the breakout? No. It would have been nice to see that. But, you know, this RSI peak with the recent move through 2.6 is above all these recent peaks, right? So I'll call that a mild confirmation. I do think that rates are probably going to work their way to 3%. I think kind of the, you know, utilities and REITs are going to have a hard time in that environment. So that's kind of my view on the credit side of the equation. And within that, I think high yield looks vulnerable, right? I think, you know, if you trade ETFs, here's the HYG, high yield, kind of looks like it's rolling over. You've got the, again, I said I don't use jargon, but now we're not talking about individual stocks for fundamental investors. We have our death cross, right? We have the 50-day going through the 200-day. We're below the 200-day moving average. Not really getting the tip-off that we like from momentum here, but I do think the path of least resistance for high yield via the HYG is lower. I like kind of fading this product here. We talked about the dollar. Here it is. I mean, you don't need a ton of words, right? I mean, this is the DXY, the dollar index. It is falling out of bed. I've been writing about it since it broke 99. You have your death cross here. We tested support, tried to rebound, didn't get there, and this move is confirmed by momentum. So here's the example. Here's your RSI making a new low. This is a 3-year chart, JC. Going back 3 years, the RSI has never been this low, confirming the move lower in the Dixie. I think the dollar is going to continue to weaken. That is part of the reason, and it's a kind of a confirming data point to my thesis on small caps on a relative basis. A weaker dollar is a headwind for small caps because they get less of their revenue from overseas as it compares to the giants that are in the S&P 500. So I wrote it here in a note this week. I think this is going to continue to act as a drag on small caps, at least on a relative basis. And finally, right, we look at commodities. JC, you've been talking about this for a long time. I think your theme for this year is stocks and rocks, right? So
yeah, stocks and rocks. So a weaker dollar would help out those rocks, right? And then history says that the S&P doesn't necessarily care, right? People are like, oh well, what's the dollar S&P going to do? The dollar going to impact the S&P? Well, you look back in history. Well, sometimes they move together, sometimes they move inversely, sometimes they don't have any relationship at all. So I don't think that there's necessarily a clean answer for that. So I would argue that the weaker dollar probably plays into my natural resources sort of theme. You got Canada and Australia breaking out of huge bases. So I think that theme is really interesting. And in particular, what we were talking about with Tom Gordon before he left was about the dollar, and how the emerging market currencies, collectively seem to be putting in major multi-year bottoms relative to the U.S. dollar. So I just find that super interesting.
It's interesting, and I think here's your reason, JC. Look at commodities appear to be bottoming, right? And those emerging market currencies are levered to commodities, right? I mean, you mentioned Canada. That's a huge play on oil, right? They have the oil sands and other natural resources. You mentioned Australia. That's another play on natural resources. So here's the Bloomberg Commodity Index, right? Precipitous move lower, rallies, and then consolidates. And now we're breaking out of the consolidation. Is it a function of the weaker dollar? Maybe. Is it a function of oil? Look, oil's been rallying. In fairness, I'll say it here. I do have long commodity exposure via the XOP ETF. I'm long that personally. And this chart and the chart of oil, which unfortunately I didn't include here, are a big reason why, right? Commodities look like they want to work higher, right? We're above the moving averages in a move that's confirmed by momentum. Like, look at this RSI reading is 80, almost 82 on, what is now a breakout. So I do pay attention to all of the major markets around the world, even though, like I said, we're focused on, tech, healthcare, and consumer discretionary. But, I think you're doing yourself a disservice if you're not paying attention to this stuff. And I am. And like I said, is this a function of the weaker dollar? Maybe this is where the weaker dollar is manifesting itself, right? There's not a big relationship in the equities market, but, there is a relationship in commodities. You're seeing it in emerging market commodities. I'm seeing it here in the commodity index. Maybe that's where it's playing out. But, I'm bullish commodities. I wasn't witty enough to come up with stocks and rocks. Maybe I should have gone to school for marketing instead of finance. But I think I'm in your camp. So that's kind of my shtick. And if there's any questions, I'd love to go through them.
Dan, you are the man. The main thing that I'm seeing from the audience is kind of just an appreciation of the perspective that you're bringing, right? I think that, here we are, we can talk about charts and we talk about the market, but I think that explaining the way you have to then explain it to the fundamental guys, I think is really cool. So I really appreciate that. I'm going to actually bring in Todd. Todd, can you hear us?
I hear you. Can you hear me?
I do. Todd Sohn, Dan, I know you guys know each other. Todd, did you have any questions for Dan?
I think Dan does a great job, and
thank you, Todd.
I'll be covering a couple of similar observations, maybe a little different spin on it, but I think we're in the same vein here.